Chinese gold frenzy. Hi, everyone, and welcome to Ainsley Insights, brought to you by Ainsley Bullion, Ainsley Crypto, and the Gold and Silver Standard as the Ainsley Group celebrates 50 years. Today, welcome back Sam, who's been looking into what has been driving new buyer interests coming out of China for gold. So, how are you going today, Sam?
Great, Chris. Good to see you again.
Good to see you. So, interesting article today. We're looking at China as a driver. Can you maybe start us
Mm.
off by talking about some of those factors that have contributed to the surge in gold demand that you've seen coming out of China? Will this impact the global market? What's going on there?
Well, it will impact the global market. Obviously, China is such a large country as well. And the buying of gold in China has been just across the spectrum. They've been buying it pretty much every way they can. So this isn't just what we've talked about in the past, where China's central bank has been buying up, tons of gold, or this hasn't just been some government initiative. This is people in China going to their, default way of saving money, and they're buying things even like gold jewelry. They're
Hmm.
buying ETFs or paper gold if they can't get their hands on physical gold. They're buying physical bullion. They're just buying gold any way they can.
So, do you think this is would you categorize this as a change in preferences from those Chinese investors as they're sort of shifting that way? Do you think that potentially has broader implications for the financial markets in China?
Yes, because it's kind of funny to say a change in preference, because for thousands of years there has been one preference. It's been gold. There's been a second preference, and that has been silver. So the recent phenomenon of China kind of copying the U.S. style real estate boom and bust. Obviously, that attracted investors. It became such a big thing. You have all these ghost cities of properties that are just being essentially demolished. And then you have the story with Evergrande and these large Chinese firms
Hmm.
that, have been going under. And so the Chinese economy was really, really new to real estate boom and bust. And it looks like it left a bad taste in their mouth pretty quickly. The other thing is the stock market. I mean, in the 80s, obviously, Japan got a taste of how sweet the stock market can be. And then after that, they've had to devalue the currency. They're just the global face of currency devaluation now, as far as a so-called developed economy goes. And then you have China. The Chinese stock market recently had some really big gains, but it's looked so ugly. And the news has been filled with stories of the Chinese government trying to prop up the stock market, and despite their best efforts, it's just kept tanking. So if you picture yourself as being a citizen in China, you're limited with investments. Real estate's going down. The company you pay to do real estate investments for you is going bankrupt. Your share portfolio is going down. It's not too difficult to go back to tradition and simply buy gold and silver.
That does make a lot of sense. You specifically mentioned that it wasn't really being driven by the central bank in this particular case, because this seems to be sort of on the ground. But do you think that the People's Bank of China here um, will become more relevant in that decision that people are making into the future? Because I know they've really been sort of holding back a little bit. That we were kind of expecting them to really flood the markets with even more liquidity, and that doesn't seem to have happened just yet. What's their game, do you think?
Um, Look, I guess one of the major problems China has is recently they've been struggling to keep the currency a little bit stronger, because the economy in China is changing. They're trying to make it a consumer economy, not just, a producer forever. So the
Yeah.
economy is shifting a little bit. They can't have their yen just be devalued so much that they can get taken advantage of. Here they are trying to make, new electric cars. If you look at the streets in Australia, they're full of Chinese cars now. They're trying to actually export and make some money off these big ticket items, and not just be taken advantage of completely because it's so cheap to buy off of them. So they're trying to claw some more money out of the rest of the world, and they've struggled to boost up the currency. So if they just go on an absolute printing spree, they're going to doom themselves worse than other countries that are,
Hmm.
all the central banks are trying to hold back. And it was a flash, it was a quite a surprise that Switzerland went and recently cut, because it's a kind of a warning sign for everyone else. It just depends on the order.
And I'd love to dig a little bit deeper into your thoughts on that, because I know you've mentioned sort of the starting gun almost seems like it's been fired, but we got very interesting news out of the US late last week, talking about interest rates there. We had Jay Powell effectively arguing that they were going to, we're probably sooner to a cut than we might have thought. It certainly was interpreted by the market as a very dovish sign that rates cuts are coming. Is that part of this discussion as well?
Well, and then you have another Fed speaker coming out right before the market closed saying he thinks we're only going to have one rate cut. I mean,
Hmm.
so you have Powell saying one thing and then the other Fed speaker saying the other. I think it's a little bit of a of a game they're almost playing with the markets. But aside from that, Powell talks about interest rates. Everyone's hyper focused on interest rates. Everyone's focus is just laser focused on what's going to happen with interest rates. It's all about cuts, how many, and when. And the thing they forget is the Fed has more tools than just interest rate cuts. The Fed dictates things like the leverage in banks. Now, why do they cut interest rates? Well, because the Fed doesn't have it. We like to joke about money printing, but it's not like the Fed has a giant printer that spits out 1 trillion notes in one day. That would be quite a good printer, but that's not how it happens. It's just done, by them changing the rule books a little bit. So one of the rules is interest rates. We all know about that now. We've been indoctrinated into the church of interest rates. We all tune in every day for the latest interest rate update. But interest rates, if they cut, that just allows banks to create more money more easily, commercial banks giving loans and things. But the Fed can also just call the banks and say, hey, look, you have 10 times leverage. We'll just make it 20. And that's the same as them cutting interest rates by half. They're potentially doubling the money supply, and they can still keep interest rates high and say, look, we're fighting inflation. We just opened another door to give banks more leverage to loan out more money, and it's the same thing.
And that's such a good
They
point.
can
They've got
also,
they have multiple tools at their disposal, and it's not. I really like that point that you're making. We've all been so laser focused on the interest rates, but that's not necessarily what's going on. And we've seen evidence, in fact, that there's other factors at play, haven't we?
yeah, and they've kind of doomed themselves as well. They've put themselves into a corner of interest rates, and everyone's looking at interest rates. So if they cut, and then inflation takes off again, who's going to be to blame? Well, they spent too much time in the spotlight, didn't they? They've kind of bragged about how much they can move the markets with interest rates. So now they need a little bit of an escape door to say, okay, we'll hold interest rates high. We're doing the right thing. Well, the banks are giving out too much money. Never mind the fact we increased their leverage or we allowed them to give riskier loans than usual, which is another potential problem waiting to happen if they choose to do that.
So to wrap it up and just sort of bring it back to this idea of China, do you think there's some lessons here if we think at the individual level? Because we've sort of covered that spectrum from the individual to the central banks and back, thinking about individuals again. What can we learn from what's happening in China there? Is that something that's likely to be replicated in the West?
Well, I don't know about West or East, or if you'd call Australia maybe Eastern, very Southeast. But what I would say is if you look at the problems China's having, a real estate market that's overheated and people aren't sure if it's going to keep going up, they think it's a bubble. A stock market that went really high, but they're not sure if they want to keep their retirement money in there. They're not sure if it's going to keep going up. All these, issues happening, and people are going to gold because that's what they've traditionally done. Now, can you name another country in the same boat? Well, it looks like it looks like
Probably more
Australia's
than one.
in a very similar boat to that. So it might be less extreme, in terms of their stock market did have quite a big significant drop. But I think we might just not be far behind because sometimes the big countries lead the way, and then the ripples kind of travel through the rest of the world. So on the individual level, Australians. It's funny hearing Australians say things like, why would I want gold? I want real money. I want paper. I want credit cards and things. And I think that might be starting to shift, especially as people ask questions like, why are these big banks and why are people in these countries that are thousands of years old with their wisdom, why are they buying gold? Why
Mm.
aren't they just hanging on to currency? And I think that's a question that's starting to pop into people's heads.
And I love that. To wrap this up, actually thinking about there is thousands of years of wisdom there, and we, as a country, we don't have thousands of years of wisdom to draw on in that particular angle. So yeah, there's some lessons to be learned. So I think that's a really good way to wrap this up. But thank you for that today, Sam.
Thanks, Chris.
Thanks everyone for watching. We'll chat again soon.